Joining me is Dan Ives, Managing Director and Senior Equity Research Analyst at Wedbush Securities. Dan, thanks so much for being here.
No, great to be here. Looking forward to it.
Dan, tech has had this really impressive recovery off the April lows. It's trading at or near all-time highs. What's your outlook for the rest of the year?
I mean, I think we're going to continue to see new highs. When we've talked about, you could be looking at S&P, potentially 7,000, and NASDAQ. I think there could be another 15% higher because look, it's our view, the AI revolution is just hitting its next stage of growth, from software to consumer to really the rest of the sort of supply chain. And even though we have tariffs and obviously geopolitical, I think it's going to be a risk on pretty significant going into summer as well as the rest of the year.
So what is it that gets the S&P to 7,000 and the NASDAQ up another 15%?
It's numbers. I mean, I just believe Street's underestimating numbers potentially for the second half of the year, but especially into next year by upwards of 10 to 15%. I think numbers go a lot higher because of the spending and because we're going to see $2 trillion of incremental spend next 3 years. And even when you start to think about now, sovereigns are starting to look at AI. You look at that spreading geopolitically, despite some of the uncertainty there, you're going to start to see it pop up more within Asia, within Middle East. And that's bullish for NVIDIA, bullish for Microsoft, bullish for Palantir, which speaks to my view. If you focus just on 1 year PE valuations, you missed every transformational tech stock for the last 20 years.
You talk about it going into next year. How do you think, or how long do you think the overall tech bull market is going to last?
I think it's another 3 year bull market for tech. Because look, it's our view, this is a fourth industrial revolution that we're living in. And we're just in the bottom first, top second inning of where AI is going. And now it's going to spread across the board to other, whether it's cybersecurity, whether it's other parts of software, whether it's infrastructure, on the energy side when it comes to nuclear and others. And that's why I believe, I get why some get concerned on valuation, but I believe we're going to be talking about things like NASDAQ 25,000, over the next, call it 12, 18 months.
What's the threat of tariffs at this point? Because previously you had referred to it as an economic tariff Armageddon, and those deadlines are approaching. So how big of a risk are they now?
Yeah, but my view then, remember, there was some scary weeks. Administrations backed off significantly in terms of China, and I think you'll see those descale further in terms of ultimate tariffs. And I think Trump administrations recognize, and I've seen it, being in DC a few times, maybe initially what they're looking for, they had to backtrack. And I think that's what the market is factoring in as well. You'll have a baseline 10% tariff. You'll have some incremental reciprocal tariffs, but that's not significantly moving the needle here. I also think the most important thing is a U.S.-China trade deal on the table, and that's something, especially for NVIDIA, when you claw back 50, 60% of that China business that they've essentially handed to Huawei.
I'm curious, how is your AI playbook changing for the second half of the year, especially now that you really are focused on this golden age of software, as you call it?
Yeah, and look, and that speaks to our Ives AI 30, the 30 names we've identified, the derivatives across, when you think about second, third derivatives of AI. It's really about software. I do view it, it's a golden age for software, from the hyperscalers to names like Oracle, IBM, of course, led by names like Palantir, which I believe Palantir is going to be $1 trillion market cap next 2 to 3 years. But the use cases are playing out, and you only have 3% of U.S. enterprises that have gone down the AI path. And that's why the bears, they're sitting there in their caves in hibernation mode. They can't see AI in the spreadsheets.
I want to focus on Tesla because I know you took a few rides in the robotaxi last weekend. You said it exceeded your expectations, but not enough for you to change your price target on Tesla shares. So I'm curious about, if it exceeded your expectations, why doesn't that impact your price target?
Yeah, look, our team having the ability, and obviously it was a pretty exclusive, not many people got rides on Sunday. Going into it, we thought it was going to be 8 out of 10. It was a 10 out of 10 because what I believe was the maneuverability in terms of the safety, the user experience. look, they're going to have speed bumps. They're going to have issues, and all those issues will continue to be scrutinized. But the reason we're not raising price target here or anything like that is because as they prove it out, as the geofence scales in Austin, as they go to more cities, I think more investors are going to recognize autonomous is $1 trillion market opportunity for Tesla. But it speaks to our $2 trillion valuation for Tesla. And look, and I get haters will hate, but I think they're really going to be the driver of autonomous globally.
But Dan, they did start small, to your point. They required safety monitors in the cars. There's already regulatory scrutiny over some of the issues with the cars. So it doesn't seem like a very fast ramp. So I think the big question is, can they ramp fast enough to compete with competitors like Waymo?
Yeah, and look, I'd rather them do this in terms of safety first, go off slow, geofence slowly build it out. Because they know, I mean, if they run over a squirrel, that'll be global news, right? So they got to be careful. But my view on Waymo, I mean, like Waymo's in 4 cities, now potentially five. They're $230,000 cars. Like no one could scale the way Tesla can. And I think that's something that's just not being factored into the stock, in my view.
In terms of the Doge fallout, how much brand and reputational damage do you think was done to Tesla? How long does it take to recover from that? And how big of a risk is Musk not necessarily playing nice with President Trump?
Mm. Yeah, look, 5 to 10% probably permanent brand damage in terms of 5 to 10% of maybe consumers that will never buy a Tesla, right? I think that will ultimately fade some of that within the US, which is why it speaks it was so important for Musk to distance himself from Trump and Doge. I think Europe, the brand issues are probably more damaging than maybe in the US. And I think we're seeing that in some of the numbers. But look, I mean, it happened, right? I mean, Doge took on a life of its own, and I think Musk recognized that. I do believe when it comes to Trump, there's a cordial relationship. I do think they become kind of friendly, slowly again. I don't view that as a negative. I think Trump is going to continue to be a supporter of autonomous, the Musk vision. But look, this is going to be some work ahead, right? Especially when it comes to brand and some of the issues that they're having in Europe, in US, as well as in China.
We'll get Q2 deliveries for Tesla next week. What do investors need to prepare for? Because I think for overall Q1, you described it as a disaster. What do you think you'll use to describe
I
Q2?
think, yeah, I think Q2 was like, it's going to be, nothing to write home about, but maybe slightly improving. I mean, whatever, call it 375K, give or take. But it speaks to my view that like 90% of the story is about AI, autonomous, robotics going forward. Look, you're going to have refreshes and you'll see them, and that will help in terms of from a demand perspective. But I think right now the focus is less bad numbers and then really driving autonomous and AI.
Microsoft continues to hit new all-time highs, Dan, and you're getting more bullish. You just raised your price target on Microsoft to $600. Tell us why.
I mean, I think Microsoft, when it comes to we're going to be talking about 4 trillion, eventually 5 trillion, because it's in their backyard in terms of AI. I think this, when I look at the stack, the AI stack, commercial cloud growth, I think is going to continue to massively accelerate. We're seeing more and more Microsoft customers go full in on the stack. And that's something where only 20% of Microsoft today is what I view as cloud, next gen AI. As that becomes 50, 60%, and that's really a whole revaluation that's going to happen on the name. 600, I ultimately think is probably conservative.
Is Microsoft and Azure's strength at the expense of Amazon AWS and Alphabet Google Cloud, though? Because you're also bullish on those names.
Yeah, look, I think Microsoft's clearly leading when it comes to hyperscale and comes to cloud. I do think AWS, Google, they've had success, started to narrow the gap, but it's not a zero sum game. I mean, you're going to have all beneficiaries here, but no doubt, like Microsoft and the Dell are leading when it comes to the infrastructure, when it comes to hyperscale, and that's been a huge part of their success. And I don't see that slowing down. I think investors are just starting to recognize now the next leg of this Microsoft story as you go into that golden age of software.
Dan, there's still quite a few Mag 7 names in negative territory year to date and well off the highs. Apple, Alphabet, Tesla, Amazon. Do you think it's time to regroup them because they're not necessarily magnificent right now?
Yeah, not magnificent, but look, each of them have different headwinds, right? Apple really nowhere when it comes to AI. Google, the worries that AI is going to cannibalize search. I think that's probably overdone, as well as maybe some of the regulatory. I think Amazon is probably the one that I believe that has the clearest road ahead in terms of where I ultimately see them going when it comes to e-commerce, as well as AWS when it comes to some of the success. So to me, I don't think you regroup them. I just think those have prove it situations, including Tesla, that they have to navigate.
Okay, just quickly, because I know we're almost out of time. When you think about the biggest beneficiaries of AI from here, would you rather buy NVIDIA at all-time highs or Apple more than 20% off the highs?
You'd rather own NVIDIA just because there's only one chip in the world, and that's led by the godfather of AI, Jensen NVIDIA. And that's not stopping. That's why we're talking about 4 trillion and will ultimately be $5 trillion market cap.
And if you could only buy one tech stock overall right now, what would it be?
You own Palantir. Palantir to me, Messi of AI, and really I believe leading the AI revolution when it comes to the software side. And I think that's a $1 trillion market cap in the next 2 to 3 years.
Okay, Dan Ives, always appreciate
Thank
your
you.
insights. Thanks so much.